Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is December 2nd, 2025, and we're diving into the first half fiscal year 2026 financial results of Four Seasons Education, a prominent tourism and education service provider in China. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss Four Seasons Education's latest financial performance.
Revenue and profitability overview. Let's start with the top line. Four Seasons Education reported a revenue of $20.4 million for the first half of fiscal year 2026, marking a 7.9% increase from the previous year. John, what are the key drivers behind this growth?
The revenue growth is primarily driven by the expansion of their enrichment learning business, which has a higher gross profit ratio. This segment's success is reflected in the gross profit, which increased by 30.9% to $5.4 million. Additionally, the company reported a net income of $1.7 million, a significant improvement from last year's $3 million.
That's impressive. How does the adjusted net income compare?
The adjusted net income, which excludes share-based compensation expenses and unrealized holding gains or losses, was $1.9 million. This adjustment provides a clearer picture of the company's operational performance, showing a robust increase from the previous year's $2.1 million.
Operational efficiencies and future outlook. Moving on to operational efficiencies, Four Seasons Education reported an operating income of $1.3 million compared to an operating loss last year. What contributed to this turnaround?
The turnaround is largely due to a decrease in general and administrative expenses by 10.7% and a significant reduction in sales and marketing expenses by 34.3%. These cost-cutting measures have improved their operating income, which, when adjusted for share-based compensation, stands at $1.4 million.
What does this mean for their future outlook?
With a focus on operational efficiency and strategic expansion, particularly in high-margin, value-added offerings, Four Seasons Education is well-positioned for sustainable growth. Their disciplined approach to expanding the enrichment learning business aligns with market demand, which should support long-term profitability.
CEO Strategic Insights. CEO Yi Joanne Zhuo has provided some strategic insights into the company's performance. Can you elaborate on her statements?
Absolutely. CEO Yi Zhuo highlighted the company's solid growth momentum, with revenue increasing by 7.9% year-over-year. She emphasized the improvement in gross profit margin to 26.7%, driven by a healthy product mix and efficiency gains. Looking ahead, the focus will be on expanding high-quality learning experiences and enhancing the tourism product portfolio towards higher-margin offerings.
It sounds like a promising strategy. How does this align with their long-term goals?
Their strategy is to drive profitable growth through operational efficiency and strategic execution. By expanding into new compliant markets and focusing on premium services, they aim to boost competitiveness and create lasting value for stakeholders.
Key takeaways. In summary, Four Seasons Education has delivered a strong performance in the first half of fiscal year 2026, with significant improvements in revenue, profitability, and operational efficiency. John, any final thoughts on their investment prospects?
Four Seasons Education's strategic focus on high-margin offerings and operational efficiency positions them well for future growth. Their ability to adapt and expand in line with market demand makes them an attractive investment opportunity.
Thank you, John, for your insights, and thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch for more financial analysis. We'd love to hear your thoughts on Four Seasons Education's performance in the comments below.